calculate the social security income. What's the social security income and how much of it is going to be taxed? You keep paying throughout your earning period. And by the time you retire, there would be an inflow from the government on account of social security income. Now, when you get this income, how much are you going to pay tax on and what would be the taxable amount? That's what we're going to calculate here. In my suggestion, we're going to follow a step-by-step approach. This is a topic where I would suggest a step-by-step approach to be really conducive. If you can, even if you understand the concept, which we're trying to do at the end of the everything, I'll try to see if we can connect it with some commonsensical call. But at this moment, I would suggest that this is a topic where it would be great if you can follow a step-by-step approach. A little mechanical, but the idea is to get the right answer every single time. So first thing is, we are going to follow just here the steps. We are going to do a question and then we're going to solve it according to the steps that we mentioned. So we know what's an AGI, right? What's an AGI? All these various business income topics that we are discussing, the gross income topics, we'll take all of those taxable portions. So we've taken a taxable portion of all the gross income items which are there. And then there are adjustments, which for the purpose of social security income will be minimal. When you get a question from here, they would ideally be questioning you on social security income alone. So once you get this figure, there is a calculation whereby you would be arriving at something called provisional income from the AGI. How do you calculate that? We're going to talk about it. So first, calculate provisional income. Then you're going to calculate how much of that social security income is taxable. So it's like saying, see, every provision in the US Act is dependent on understanding how much you need that provision, right? In other words, I'm going to put you into a bracket. AGI would be a very big yardstick for understanding whether you need, how needy are you. Now, what if you earn, then you have to pay a lot of tax. If you earn less money, so how do you understand what is earning? We don't start with gross income, we start with AGI, that's the reason why that line, above the line and below the line is very important. So what do? I ask you to calculate a version of AGI, and then I ask you to put yourself into a panel and decide whether you are rich, whether you're super rich, whether you're poor. So something like that, okay? These are not terms that are used by the law, but I use it so that it becomes very easy for us to understand what we are doing and why we are doing it. And then depending on how much of your income, we try to decide how much of the tax you have to pay. So this is that. And then we try to figure out, is there a way? So what we've done, we first calculated your AGI, and then most of the provisions will calculate a method of using the AGI to arrive at a separate figure that they think is more important for you to deserve the particular tax reduction or to determine how much of the amount is taxable. Once you calculate that figure, in this situation, we are calling it a provisional income. Any income you could call it, a modified income, a provisional income. And I put you on a ladder and I decide how much of the amount should be taxable to you. And then I give you a minimum. So then I draw boundaries and I say, okay, you're taking this amount, but put it within the boundary to see at least this should be there, or this amount should not be more than. So it's like saying, first, I give you a modified version of AGI. And we call it different things. Somewhere we call it modified AGI, somewhere we call it provisional income, adjusted AGI. So what we've done is we are giving you a figure. Okay, so a ballpark figure. These are not terms used by the IRC. These are terms that I am using to make the provision a little simpler for you guys. So first, what we are doing is we are arriving at a ballpark figure, which is some distorted version of AGI. And then we are putting you on a scale to determine how much of the provision is going to be applicable for you, which may be a deduction. So the higher the income, the less will be the deduction, or which may be an item of gross income, which means higher the income, higher would be the tax impact. And then we're going to define limits to you. And we would say, okay, it should not be more than this, it should not be less than this, and so on. So there are 3 steps. So how do you calculate your provisional income? You take your AGI. Now see, what we're trying to see is not how much of the income is taxable, because that is what AGI gives you. We're trying to figure out how much of the money you make. So that's the reason we add all the excluded items of income back. So we take AGI and we add all your tax exempt income and your foreign income, meaning that, see, this is the figure that you're actually making. So we take the AGI and then we add all the exempt income. And to this, we also add half of your social security benefits. So imagine if you are a person who's just retired You might be having your interest income, dividend income, royalty income, rent income. A lot of these passive incomes will be coming. Capital gains can be there. You may be doing some kind of ad hoc job, like a side gig. So all of that would be your AGI. And to that, I'm going to add all the income that's not included in AGI. And then to that, also going to add half of your social security benefit. So this is the figure that now I have defined as a base figure. See, I'm going to use this ballpark figure. How much of the benefit should be given to you? Then what do? I put you on a scale. How do I define the scale? Most of the time, let's say when you're doing qualified business income deduction, any kind of a provision that you're using, the terms I would be using is below the scale, above the scale, or anywhere in between. Now, these thresholds differ, and many a times they are indexed. But for this year, 2024 IRC code, the figures that we have is exactly the same as we had last year. So if you're a married filing jointly couple, you're going to start with a base amount of 32,000. Now you're going to use the word EA, which is the base amount, and the ABA, which is the adjusted base amount. So we're going to say, okay, figure out if you are a married filing jointly couple or if you're a single person, individual, right? So I start with a different threshold of 32,000 and 25,000. These are given figures, guys, okay? We don't choose these figures. These have been given by the IRS. So if your income is below these thresholds, then I'm going to give you 0% of your SSP is taxable. So remember, there's a figure on Social Security benefits that we have already received. And what we're trying to determine is how much of that Social Security income should be taxable in your case. So we are saying if your provisional income, which is some distorted figure that we've taken after taking. So we added back to the tax exempt income. And we also added back half of your social security benefits. So we say, okay, on an average, this guy makes this much of money, and we call it provisional. Then we put it on a slab, and we say, okay, are you below a particular limit, threshold limit? Are you in the above zone? Are you anywhere in between? If you're in the below zone, how do you determine the below zone? Figure is given to us depending on your filing status, maybe 32 to 25. Ideally, these figures are given to you in the question. Okay, I don't think you're going to learn this. These figures will be given to you in the question. If you're below that threshold, I'm not going to let any of your social security benefits be taxable in your hand. It's zero. The moment it is above the threshold, I'm going to make 85% of your social security benefits taxable in your hand. And if it is anywhere in between, so what is above the threshold? It's 44. So below 32, above 44, and anywhere in between, I will make 50% of the social security benefits taxable in your return. And then I've defined some threshold limits for you, which we're going to see just now. Okay, so I've told you, let's just calculate and figure out what would be the minimum. So I've given you the taxable figure, and then I've told you, okay, this is step one, this is step two, and then I've said, okay, I've given you a calculation, and take the lower of the two big amount that would be zero. Let's take a question to this situation again. Okay, so let's take this question, please. You had your SSP of 20. So this is the benefit that you've actually received. And we're trying to figure out how much of this 20 is taxable. So ask of the question is, how much $20,000 is taxable in your hands? Okay, so this is the question that we're trying to determine. So what we'll do, we'll first start with the AGI. What is the AGI? AGI will include all your taxable income, everything which is taxable. We've not learned adjustments till now, but for the time being, in the questions also, they will not give you adjustments. But remember, AGI is not gross income, it is gross income minus adjustments. So this is taxable interest. I will take 30,000. I will have dividend 1,000, and I will have taxable pension of 16,000. So your AGI would become 1 second. Why not taxable pension? Be very mindful when you're doing the questions, okay? Just give me the figures for this, guys, okay? I think it is 64,000. Now, how much is this? 64, right? 3, 4, 5, yeah. 64,000. Just give me the calculation for this. And then after this, then we go to the first step. So we've calculated the AGI. So I've taken this, I've taken this, I've taken this. Now, what is one? Step one is we have to, and they've told you that you're a married filing jointly return where both the spouses are more than 65 years. Great. So take the first step. What is your provisional income? I start with the AGI of 64,000. I add my tax exempt interest income of, it's 64, right, guys? 1 second. I have not been checking this. Just let me know the figures, okay? And then to this, I'm going to add my tax exempt income of 15,000, and to this I'm going to add half of my social security benefits. So here I know my SSB is 20,000 and I know I'm a married filing jointly couple. These are the questions that we already know. These are the points that we already know. So half of your social security benefits is half of 20,000, means it is 10,000. So you add all the three up and you will get your provisional income of, let me finish the concept, okay? Then if you have a question, we will take your question. Just give me the figure. Then we will have your provisional income of 89,000, right? Yes, the provisional income becomes 89,000. Then the provisional income of 89,000. Okay, so step one, we calculate the provisional income. How do we calculate it? We start with AGI. To that, we're going to add all the tax exempt income. And to that, I'm going to add your half of social security benefits. So step one is done. We've got that provisional income of 89,000. Now, 89,000 is definitely above the threshold limit. I'm going to take the MFJ limits, right? So your base amount is 32,000 and your adjusted base amount is 44,000. Mine is lying in the above zone. So in the above zone, I know the first thing is 85% of my social security benefits is taxable. That means 85% of 20,000 is taxable. I think that is going to give you 15,000. So step one, calculate your yardstick. Okay, calculate your modified AGI or provisional figure that you want to use to throw the population into category. I use that figure as provisional income. I calculated my AGI, which is annually taxable. And to that, I add my tax exempt income in form of excluded foreign income and tax exempt interest income. And to that, my social security benefit. What you get is your provisional income, and I'm going to put it on a yardstick. And I'm going to determine whether you're above, below, or in between the threshold. The given figures are for married filing jointly or single separately. So you need to determine which one is applicable for you. In my example, it was in the above zone, so we took 17,000. Then we tell you, okay, it has to be lower of the two figures. What is the lower of the two figures? I said, okay, look at this situation. If I would have actually followed this to the letter T. So what is your social security benefits? Your social security benefits, your provisional income was $89,000. Had I followed this completely, and I would have used it as a slab, how much would have been your alternate social security benefit tax? So I said, okay, till 32,000, which is my slab limit, I would not have paid any tax. So none of my social security benefits would have been taxable. From 32 to 44, that means on another $12,000, I would have paid 50% of social security benefits taxable. So had this provisional, so what I'm trying to say is calculate these on the provisional income to determine how much would have been the alternate tax. So I would say, okay, 6,000 would be taxable. And then in the above zone, how much of your provisional income is in the above zone? So it is $89,000. The limit is 44. So it is 45,000. So I use the slab rate of $45,000 and now I'm making 85% of it is taxable. How much is the figure? Just let me know the figure. I think it is 38,250. So if I would have calculated the slab provisional income, at the minimum, I would have paid 44,250 in offer to taxation. For the provisional income would have been 44,250. Just ensure that you have to take the lower of the two figures. So in my example, it is 17,000. In other words, what they're trying to tell you is ensure that the amount that you're taxing is the lower of either the provisional income. So if you're actually not making a lot of provisional income, I'm not going to let a lot of your social security benefits taxable in your hands. At the max, it will be 85% of social security income. But if your provisional income is only very low, then I'm not going to even tax it at 85% of social security. I'm going to reduce your amount and I'm going to take the lower figure. I have another question which will demonstrate what the lower figure would be. Okay, but these are the three steps. You start with step one, provisional income. Step two, calculate how much of your social security benefits is taxable. Remember, this is on the amount which is the benefit that you have received. And then we are going to apply the slab rates on provisional income to calculate the alternate amount. We are going to say that please take the lower of the two figures, either 85% of social security benefits or 85% of the provisional income using the slabs as is given to you. give the lower of the two figure and compare, and is the amount that will be offered to taxation. So in our example, the amount that will be taxed as Social Security is $17,000. My suggestion is let's do the next question, and then I'll open the, then if you have any questions, I'll take the questions. At least let me complete the entire thought, and then we'll take questions. Now we are extending this concept a little ahead. Okay, so this is the next question where you will see how the lower of the two figures is going to make a difference. See, in this example, again, we start with the AGI. In the AGI, we are going to take, actually, okay, tell me, what is your question?
Ma'am, every time we have to calculate the taxability as per the what is the SSB and according to the basis both, and then we have to compare it.
Yes. Okay.
Okay,
This
ma'am.
is one thing which is step by step. Okay, let's do the next question again, and then I'll round up and take your question again. Will that be okay? Because then
Yes,
you'll understand it really well. Okay?
yes, ma'am.
Yeah. See, another question. Step one, calculate the provisional income. For that, we need to start with AGI. So how are you going to start with AGI? Take all the taxable figures first. Okay. So I'll take tax exempt interest is not there. I'll take IRA withdrawal. SSB is separate. I'm not going to take that. So I'm starting with the AGI of 30,000. Okay. So I'm starting with the AGI of 30,000, and I know that I'm talking about the Social Security benefits of 20,000, and I know that this is very important, guys, because your slab rates would be dependent on whether you're single or you're married filing jointly. So I'm talking about the married filing jointly. So I started with the AGI of $50,000, and I'm going to add my tax exempt interest income of $10,000. And to that, I'm going to add half of my Social Security benefits of 20,000. So this is $10,000. So my provisional income becomes $50,000. So step one, I'm starting with the provisional income. How much? Take the AGI, which is generally the taxable part, interest income, and add back your half of Social Security benefits received. Then you're going to put them on a slab. You're a married filing jointly couple having a provisional income of $50,000. This, if you look at this, one second, it is still in the above zone. It is still in the above zone because the figure is more than $44,000. So step two, I will know that 85% of my Social Security benefits is taxable, which is 85% of 20,000. So I know that it is $17,000. I go to step three. Had I used provisional income, what would have been the amount that was taxable using the slab rates? So I take 32,000, I take another 12,000, so this makes it 44,000. And in the end, I'll have 50,000 as my provisional income minus 44,000, which is $6,000. So I have broken 50,000 into 32, 12, and 6. Now I know 0% of 32,000 is taxable, 50% of 12,000 is taxable, and 85% of 6,000 is taxable. So this is 0. This is again 6,000. And this is, just calculate the figure and tell me how much is this, guys. I think this is $5,100. This is $5,100. So this is giving you a total of $11,100. Now you take the lower of the two figures. And in this case, I'm not going to let the person pay as low as 100. In other words, if your provisional income is high, because a big portion of it is also because of Social Security benefits, I'm not going to penalize you by asking you to pay a lot of money on taxes. I'm going to give you a lower burden of taxation by taxing lower amount of Social Security benefits. Now is the time to ask your questions. Tell me, what is your question? Let me know what is the part that you were not clear. Naveen, you're talking about some 29,200. What was?
Ma'am, deduction from FJ 29,200. Why we have not taken in this?
Which deduction of 29,200?
29,200 that we get standard deduction.
Oh, but standard deduction is after the. So this is AGI, right? So see, this is gross, and
Yes.
from gross income you reduce the adjustments,
Hmm.
and then from there you have calculated AGI, right?
Okay.
Standard deduction comes after this, isn't it?
Oh, this is itemized item.
No, this is one part of gross income is Social Security benefits. I'm trying to, okay, think about a person who's retired, okay? And for this guy, you will see that there's something called Social Security taxes that a person pays in the US. Every month when you are earning anything, you have to pay some part of it as Social Security taxes. The idea is when you retire and you cannot earn, that is the time the government will pay you Social Security benefits. Have you understood? We are trying to figure out how much of that social security benefit is going to be taxable in your hands. So what we're trying to do is one part of gross income. We're trying to figure out how much I will place as amount that is taxable. Are you understanding?
Yes, ma'am. Okay.
So then the standard deduction does not come, because standard deduction comes once you have already included your gross income, taken your adjustments, then and then from here you're going to determine whether you're going to reduce your standard deduction or itemized deduction. Are you understanding? I have received, there's an income, there's an inflow of cash in my account, and I'm trying to decide how much of that cash would be put in gross income. That is what we are doing.
Yes,
is that clear?
Yes.
Okay. So this is a method. Again, I don't see them asking you everything in this, because they're going to put you smaller questions. I'll show you the questions also that they're going to put you on this. But I wanted to give you the entire picture, so that now if any question can be put, how do you calculate provisional income? How much of your social security benefit is taxable? You would be able to answer everything. Okay. Anybody? Sakshi, do you have a question? Any question? Okay. So now see. Now we've understood this concept, right? So what is social? So what we're doing, okay, what you thought right now, Naveen, that's very important, because every time when you get a question, the first thing is, and this is something that I keep telling all my students, the first thing is, imagine as if you have a linear factory. You're entering from one gate, all the processing is happening, and the finished goods are leaving from the other gate. And imagine rooms. Imagine that there are rooms and there are doors. It's very important that whenever you're given a question, you should be able to understand in which room you exactly are. You're calculating gross income. So imagine gross income, adjustments, standard deduction, itemized deduction. So it is very important to have that linear concept in your mind, that this is gross income, this is AGI. Here you have two rooms, you can take either of the doors, and then you're calculating qualified business income if you want. And then, so it's very important to understand which room are you in, which part of the process are you in. Because if that is not frozen, you would not be able to really find a way if I confuse you with certain questions. Okay, because understand what we are doing right now, you exactly know where we are. But when all the questions and all the concepts will be merged, and when you're going to sit for your paper, it's very important for you to close your mind, close your eyes, and determine, okay, and this is where I am. I'm determining gross income, and what I have to understand is how much of that element is going to be put in gross income. Because if you know where you are in the process, it becomes very easy for you to just, in the other mind, use that mental map and figure out what are the provisions. So first, understand where you are, what you're doing. Second, understand what is the topic. Is it social security income? Is it gross income? Is it within the gross income, which topic you are? Then know the laws and the rules really well, and simply go and then apply that rule in the particular fact. If you can do these four really efficiently, you can answer any question that will be thrown at your way. Now answer two more questions, but these are the questions that are generally going to be put to you. Not everything will be put. I don't them asking you a question where you have to apply all the concepts. It will ask you piecemeal questions in your concepts. The first question is, how much of his income, to determine if any of his social security is taxable, the taxpayer should compare how much of his income to the $25,000 amount. So be very clear with the keywords. The moment you know can you tell me what are they asking? If I don't read the question, only the ask of the question. Can you tell me in one word, what is it that they're asking you? Determine if any of his social security is taxable. G should compare how much of his income to the clear, no problem. We'll read the question and then understand if you're able to relate. The taxpayer who is aged 70 is retired and works part-time as a security guard earning $8,000. He received $5,000 interest from a savings account and $2,500 interest from tax exempt. Any of his social security is taxable. Garrity should compare how much of his income to the $25,000 base amount. Now, can you tell me what is the call of the question? What are they asking you to determine? No, they're asking you to determine the provisional income figure, isn't it? Because what they're trying to ask you is how much of that income you would be comparing with the base figure of 20. So single base figure is 25,000. They're asking you how much of his income you would have to compare with the base figure to determine how much of the social security income is going to be taxable in his. Now it's easy. We need to calculate what's the provisional income figure. So what I do, I start with AGI. I take how much? I take all the taxable. So this is his wages. So it's compensation income of 8,000. This is his interest, which is going to be taxable. This is tax exempt, you're not going to take it. And this is his pension. So 6,000 is pension. So this is pension, this is interest, and this is wages. I'm going to add this up, and this is 19,000. And this is his AGI. That I'm going to add his tax exempt interest income, and I'm going to add half of his social security benefits. Tax exempt interest is 2,500 and his social security benefits was 12,000. So half of 12,000 is $6,000. Add this up and tell me the answer. Add this up and tell me the answer. I think it is 27,100. Now go to the next question. See, they've given you the base amount. The base amount for married filing jointly is 32,000. We already know that. What part of the social security benefits will be? So here you're going to calculate your taxable social security benefits. This is G, file a joint return. So we know it's a married filing jointly couple. Mr. G received 8,000 in social security benefits and Mrs. G received 4,000. That means Social Security benefits received as a couple is $12,000. Their income also included $10,000 taxable pension and interest income of $2,000. So they do not have any active money from the active sources of income. They have only passive income. They have received Social Security. And if you look at their AGI is taxable pension of $10,000, interest income of $2,000. That means I'm looking at the AGI of 12,000, and to that I'm going to add my Social Security benefits. If you look at this, right, there's no tax exempt income. I'm going to add half of my Social Security benefits, which is $6,000. I'm looking at $18,000. Can you tell me what's the answer now? Very good. So we are in the below range. So your provisional income is $18,000. It's a married filing jointly couple. We are in the below range. So I know that none of my Social Security benefits are going to be taxable in my. Is this clear? So we've completed one more concept, which is Social Security income. It's an easy concept. It's more or less rule driven. My suggestion is first understand all of the question very well to understand what you're going to be discussing. Apply the rules, take the step-by-step approach. This is a classic place where you can use a step-by-step approach and it will be working wonders for you. Okay, so with this we completed the first part of your delivery. Now